Good morning, traders. Bennett Tyndall with TradingAnalysis.com. Today is Wednesday, July 8th. I hope you all had a fantastic holiday weekend. Markets were closed last Friday into the Independence Day break, so hopefully you guys had some time to spend with the family and stayed safe and healthy. We continue to see the markets push to the upside. We've seen some incredible moves in stocks like Tesla breaking through 1,400. We're now seeing gold through 1,800. S&P futures are mostly flat this morning, up just over 0.1%. Here going into the open, we've been tracking the progress on the coronavirus front. Obviously, as discussed last week, we were tracking the kind of exponential growth that we've seen is in terms of number of daily cases, but obviously those aren't the important metrics that have been kind of driving the stay-at-home and shutdown orders, at least early on. And we continue to keep track of the key metrics, daily hospitalizations, daily deaths, and kind of bringing that all into the picture in terms of where the markets are going to be heading. And we're now getting into earnings season once again. We've got some key names reporting over the next 2 to 4 weeks, so things should certainly get interesting, and we might have some additional clarity and catalysts to help this market kind of catch up with the recovery effort, or what's going to happen from there. So without further ado, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys doing, gentlemen?
Good morning, good afternoon, good evening, whatever time frame you're in today around the world. We got global coverage here, Bennett. So what's morning for us could be late evening for the Aussies.
This is true. As Jim Carrey would say, good afternoon, good evening, and good night. That was a crazy movie, The Truman Show. So yeah, that's very true. We do have people tuning in from all around the world. So glad to have you guys here. Thanks for taking the time out of your morning or afternoon or evening to be joining us. Speaking of afternoons, it's afternoon in Serbia. How are things with you, Alex?
Well, it's same as all around the world. Cases are rising. We had some protests last night, relatively violent ones. So I mean, it's normal. What can I say?
The new normal.
I mean,
Yeah.
yeah, it's a new normal. So we are facing kind of a new possible police curfew over the weekend. So people was protesting. Yeah, it's a kind of bit difficult to be psychologically stable in all of this, months after months, with a really future which is you don't know where it's going. So people are stressed out, and that's quite understandable.
Yep, absolutely. 2020 has certainly been a challenging year. Obviously, not just here in the States, but for the world. So
yeah, everywhere.
Terry, what do you guys seeing this morning? What are your thoughts overall on the markets? Anything you're watching in particular this week? Any key macro developments, Alex, before we jump into an index overview?
Yeah, I mean, currencies are relatively stable. We are going in some sideways consolidation, which we are going to look later. I expect my wave count it's matching your one on the S&P, so I expect a pullback lower. We are going to see, I think today or tomorrow, if this move down, small move down, it's going to develop into a 5-wave move on a smaller time frame, and I think we are due for a correction. So macro themes are not so many. Brexit is relatively going fine in Europe for now. The Germany lawyers team actually agreed from the legal standpoint that Germany can participate into this issuance of joint bond, which will basically cover whole the nation in European Union, which is a good news from the perspective of the fiscal union, and of course the spreading of the COVID-19. That's kind of a three main macro subjects which are around the world, China as well. So nothing new, nothing new on the list. We are expecting the jobless claims figures to see this week. Are they going to stay in a range of 1.5 million? Central banks are keeping the interest rates lower as they can. So as the September is approaching, we are going to see if the Fed is going to align with yield curve control. I think it is not good that the epidemic is prolonging. It's not going to be nice, and more countries are gonna have more weight on the fiscal side, since they have to finance relatively closed economies in the world. So I hope the solution will come soon. Otherwise, if we go in the next few months of this, it will, I think, become really difficult.
Yeah, absolutely. Very well said. And Terry, before I go over this wave count, is there anything that you're seeing, and I know we're going to cover sector rotation later, but is there anything you're seeing that might kind of distract from the wave count that we're looking at here?
Well, I think what I'm starting to see is, as this COVID wave went from the east to the west around the globe, we're also seeing, resurgence of manufacturing and production activity in that same fashion. And I think, we've got a second wave coming, but we've also seen a bit of recovery in certain areas. I think EEM is starting to get interesting.
Yeah.
I've got a list of Chinese internet stocks I'll share with you on the rotation here a little bit later. Some of the top performers there. I've personally got my eye on Alibaba heading northward. So yeah, I think investing never stops. It's just where to look and where's the next opportunity gonna strike. So.
Very good. Appreciate it, Terry. Yeah, that move in EEM certainly was challenging that potential 5-wave completion that we were tracking there. So, guys, without further ado, let's go ahead and jump into it. We'll go through a brief discussion here in the S&P. Actually, I want to start out with the NASDAQ because we were pointing out last week that specifically in names such as Google and Apple, we had identified this 3-wave structure, which let me just go ahead and show it to you guys on Google. Then we'll hit Apple, then we'll come back to the NASDAQ. And the 3-wave move that we were looking at was this structure here on the 195-minute half-day chart, exactly a half-day candle, or in this case, a half-day bar. This 3-wave structure, which unfolded here between, call it June 12th through, June 24th, gave way to a 5-wave decline, which told us this could very well be simply a 4th wave flat. And we identified a pretty good zone of support here specifically for Google, right there at around 1350, which in terms of Elliott wave and Fibonacci, that gives us what's referred to as equality in between corrections 4 and 2 of the same degree. In addition, we have a nice 1272 extension of B in terms of our C wave, which is a very common 4th wave flat target. From there, we've seen an incredible move from 1350 all the way breaking through 1500 yesterday. We tapped around 1520 in Google. That same 3-wave structure was evident here in Apple as well, as you can see back in this little swing higher. So if we take this full circle to the NASDAQ, we discussed last week, basically this was the 30th, so this was the 1st, which would have been last Wednesday, getting ready to contest that 10,200 level in the NASDAQ 100, and we pointed out the fact that this could very well be supportive of this being a 4th wave with continuation higher in the NASDAQ, which we've absolutely seen. We've pushed over 10.5. We're through kind of our higher degree Elliott wave trend channel, which is certainly a zone that we often watch. Within this wave count, we do have a peak in momentum on the intraday charts and what would be a third of a third of a third, which is often a traditional technical indicator that you can use to verify your wave counts. Typically speaking, you'll look for various RSI divergences and different volume indications to help determine these counts. And we do have nice squaring up of waves 4 as compared to 2, which we saw in Google. And this is given way to a pretty solid break higher here in the NASDAQ. Taking that into consideration, we've now established our 243 Elliott wave trend channel, which we're now coming off a 618 extension of 5 and 1. We do have the possibility for continuation here, but let's bring this back to our conversation in the S&P, because last week in the S&P, we pointed out the fact that of the valid Elliott wave interpretations, one that would kind of line up with implications out of the NASDAQ was the count that we're looking at here. And this lower trend line just essentially represents the lower boundary of this upward trend channel. So we broke through this trend channel to the tune of an 8% correction. We broke back into the trend channel, tried to find support, failed it. Now we're pushing back into some pretty key zones here, at least in the S&P, and those zones are equality essentially of our corrective waves, as well as the overall 78.6% Fibonacci retracement of the decline off the high, which has been really key resistance. In addition, we just kind of back tested the breakdown from that island reversal. So this count here, if I get you off the 195 and back to the daily, would essentially give us kind of a prolonged C wave down into fourth wave support, while the NASDAQ exhausted that fifth wave and gets set up for a correction lower. So taking this off the S&P, taking you to some of our leading sectors. Let's look at the XLC. We had tracked a 5-wave completion here, but we also have a very similar alternate, which gives us a nice 3-wave move here in 4 with progress higher there in 5. In terms of some other individual names that we've been tracking, obviously Apple was one that was hinting at additional upside. We had Facebook. This is another one that was also giving us implications for additional upside. In fact, if you take a look at this particular wave count here, we've got pretty much the same thing. We've got this 3-wave structure and then into a nice impulsive C wave that squares up our wave 4 compared to wave 2 quite well, and now puts us in that wave 5. So a lot of the key weighted names within the NASDAQ 100 and the leading sectors that have really accounted for a large majority of this recovery effort are, at least from a technical standpoint, getting a little extended and seeing that possible 5-wave completion coming into play. So guys, that's about it in terms of chart analysis from me. The NASDAQ, I think, was the strong move out of that wave 4 was a good indication that we were going to see continuation in those names: Google, Facebook, Apple, which we've certainly seen. I know we've got some requests for crude oil, but I'm going to leave that for Alex when we get to his section here in just a little bit. In terms of EEM, as Terry mentioned, since he's going to be touching on that, if I look at the daily chart here for EEM, and let's just go over to the weekly chart, and let's just kind of take a look at what's been the progress here in terms of price action. And essentially from 2018, January of 2018, we printed a 3-wave move lower into the March low with the markets. And from there, you could very well get a completed 5-wave structure. Alternatively, we were viewing this as something a little more bullish potentially, as a 1-2, 1-2, up in 3, down in 4. Now we're in 5 of possibly this wave 3 up to that 1-6, 1-8. So some constructive looking signs there.
Those very last few bars there, Bennett, and look at the energy, the momentum, or the impetus pushing EEM higher in this last week or so.
Yeah, 2 acceleration gaps here in this move off the 40 handle.
Yeah, so you clearly had a consolidation, whether you had a triangle in 4 or just ABC. Maybe I think that's probably a triangle, and now you're seeing breakout. You're seeing breakout in high volume. That's giving you a clue that there's more to come.
Absolutely. And if we take this over to the 190 or the daily chart, we're through the daily 200 moving average with that 50 obviously trailing towards price action. On the half-day chart, we've already seen that shorter-term moving average crossover. That was kind of our support within that consolidation, and now we're seeing that continuation. So very excited to see what potential stocks Terry has lined up in sector rotation, and we'll bring that into our wave counts here at Trading Analysis. So, guys, Terry, you ready to take it over and
sure
and save the day, sir? I'm going to pass the screen your direction whenever you are ready.
Okay, guys, so this is our weekly sector rotation, and we use the weekly time frame here mostly for our swing trades. So I will show you, since we are in a new we're in a new month of July. I'll show you the monthly here in a moment, but I'm going to go ahead and start. I've already got this weekly pulled up. This is the list of the 11 sectors that makes up the S&P. There are 5 sectors currently with relative strength ratio outpacing that of the S&P. Technology, of course, consumer discretionary, communications, healthcare, although healthcare is deep down here in this weakening quadrant and has been rapidly pushing away, right? So there is still some strength in the healthcare sector, but it's not nearly as much as we're seeing in these other 3 sectors here, right? So there's a little bit of a momentum decline in discretionary. One of the new entries into the leading quadrant here is this materials sector, and I've been talking for several weeks now as we've been forecasting it, as we've been watching materials come closer and closer to pushing over. I cautioned right here that that wasn't a good sign when materials reversed lower, but then it hooked again and hooked back to the right, and then crossed over into the leading quadrant. So staples, utilities, real estate, clearly down here in the lagging quadrant, while we've got energy, financials, and industrials in this improving quadrant. They're just trying to play some catch up here with some momentum moves. We're losing momentum in energy stocks of the rise and recovery. You'll see, if you look at trends of most of your energy stocks, you'll see them stalling sideways. Price performance similar, I think, to seeing crude oil stalling out around the $40 a barrel price region, waiting for new information there on that. So let's take a look here at a monthly rotation. This monthly rotation is more inclined for investing horizon, and which sectors we have in our investing horizon. Again, it's technology and healthcare. Healthcare in the monthly is still seen increasing, but its relative strength performance to the S&P is not significantly higher, although it's got a little bit more momentum there. Utilities clearly pushing lower, as well as staple stocks. So clearly the rotation as far as the investing horizon, it's just technology, right? So that's what we're seeing there. Let's throw that back to the weekly. Let's take a look inside this. This is a materials sector. This is the top 20 stocks by market cap that I track inside this materials sector here, and it's mostly made up of some of these chemical stocks that are now pushing. They're continuing their push further into the leading quadrant. Now we see Freeport, McMoran, and DuPont. Also strongly higher here in terms of momentum, but also pushing further to the right. A little bit of decline from DuPont's really significant rise that it made up in this improving quadrant. You can see how long those tails are. We call that we measure that as velocity because we already used the word momentum, but it's a change in velocity in the vertical axis is an increasing relative momentum relative to the benchmark there. And so there was a lot of push forward. Now we're starting to see the momentum move sideways. So the momentum's just holding steady. Okay, so if we're going horizontal, the momentum's holding steady. Once you start to see it drop, then it's starting to lose a little bit of momentum. But there's several stocks in this group here that I think are they're not going to be. They don't appear to be poised to become significant leaders, but I think they certainly are valid investing or trading speculations.
Yeah, I think a lot of them do have some catch-up work to do. You're right.
Yeah, Newmont Mining is the one with the highest relative strength, but it's been steadily weakening for quite a period of time here. Let's jump over here to technology. So technology is our strongest sector, and in that strongest sector, it's PayPal, Nvidia. Nvidia just doesn't want to give up the ghost. Nvidia's pushed lower in terms of momentum, but it's just retained its region here of high relative strength, and I think it's going to continue that. The direction of the arrow, the heading is down in terms of momentum, but the relative strength is huge. So is PayPal. I don't see exiting these positions anytime soon. I do see Apple continuing to rise higher. Adobe, I see Adobe higher. Salesforce.com is coming back in strength here. Broadcom is gaining some relative strength, but certainly here's the list in order of your most highest relative strength. Microsoft is in there. Microsoft is down in the weakening quadrant, while Apple has already pushed itself back out of that weakening quadrant back up into the leading. Microsoft may be hinting at a hook here, so a little bit of a turn in a direction, and we could see, just as we saw Apple when it pushed down into the weakening quadrant. It was about here. This is where Microsoft is about now, and we saw that turn. So we want to watch, and we want to see if we see something similar there, which may mean that we have another push higher in Microsoft, and it could potentially return back up into this leading quadrant. Let's take a look at something on the downside. So, in these staples, utilities, real estate sectors, I'm really not seeing anything at all that's good. Okay, so everything, this is the utilities. So it wasn't that long ago, just back in late April, we had almost all of these utility plays up in our leading quadrant, and they have just rapidly, you can see the them racing towards this lagging quadrant, and all have pushed down into this lagging quadrant. The key thing, though, is in the short term, it does look like they have reached a bottom in terms of their momentum decline. A lot of these are all starting to hook northward and potentially could return. So maybe in your longer term horizon, you're going to see another rotation of these guys back up. It'll be questionable whether they return to the leading quadrant. They could certainly rotate back up into the improving. We'll just have to see what the future holds for that. But I do see some stalling out here in all of this. Let's look inside discretionary. Discretionary is one of our leaders. Okay, so you got technology, discretionary, communications, and then materials leading. So in this consumer discretionary, it's the same names: Amazon, Dollar General, Lowe's. I think Lowe's over Home Depot. Lowe's and Home Depot both are starting to hook and turn a little bit lower in terms of momentum. Lowe's has got a little bit edge in terms of relative strength over Home Depot at this point in time. All right, so Staples. Staples is another one that's definitely down in the lagging quadrant, and there's really no strength at all left in this sector. Maybe McCormick. I think the one shining bastion here is McCormick. This is your price chart for McCormick on the daily, and McCormick is trading above the 20, 50, and 200-day simple moving average. So that's McCormick's not a bad looking stock in the Staples group. But most of these others, here's this General Mills. General Mills has made a nice recovery, but there's just this stalled out consolidation, chop. It's in an improving quadrant in the daily formation, but in our weekly formation, it's down in the weakening quadrant. All right, so I want to share with you a little bit of some of these EEM stocks. I pulled together a list of Chinese internet stocks. I'm going to open that up in a chart here and give this to you. So this is a group that I've got my eye on, and let's take a look at some of these guys. You can see the tails. Look, I got to zoom way out on this thing to show you the tails. This is still a 4-week chart. Look at the tail. Look at the length of the tails on some of these guys here. Specifically, let's start with Pinduoduo. I don't know anything about this company other than just simply observing where it's at. It's got, huge relative strength ratio, and these are all in reference to the S&P. It's got a huge relative strength ratio. It's outstanding among the group. JD.com, I believe we know a little bit about JD, ZTO Express, GSX, VIPS, NetEase, KWeb. I think Todd has traded KWeb before, maybe NetEase, Baozun, New Oriental Education, and Baba. I like Baba here personally. Let's see where Baba is at. Baba's down here in this weakening quadrant. It's actually moving up. So, say, is it the standout amongst this group? No, not yet. But if we just look at the price performance of Baba, Baba's got a nice run coming up here. Maybe this is some kind of a beginning, a leading diagonal. But this breakout that Bennett was showing in the overall EEM stocks, this is really what's got my attention. That just happened here. This huge, what do you call it, Bennett?
Acceleration gap?
Acceleration gap, exactly. Sorry, that word kept escaping my mind there. That acceleration gap has got me interested. JD.com does not have a very long tail. Sorry, bring that back up again. So this is JD, and this is a daily, so these colors match to the daily rotation. Let me change it to the weekly. So there is so this is JD on the weekly. So JD's been coming off a bottom that's formed all the way back in November 2018. Nice consolidation period right here. Breakout happened November 2019. Okay, here's another correction. This correction was our COVID pandemic. So JD had been pushing higher in the leading quadrant. It corrected from about 43 down to 33, and then has just pushed higher ever since. So I think we tended to have our attention focused elsewhere, and we haven't really been looking at the gains that are being made in some of these Chinese internet stocks, maybe for good reason, speculation. But certainly, I'm starting to see now good technical formations, breakouts that are happening, and I think maybe we need to start thinking about looking at investing in some of these groups.
Yeah, certainly some solid looking charts in some of those there.
So do I have any have I got any questions on this, guys? If not, I'll give it back to Bennett or Alex if you want to take it over.
Alex, sir, you are up next. And before we continue, guys, just a bit of a heads up. We do have a webinar event that is going to be taking place tomorrow evening. This is going to be 8 p.m. Eastern Time. If you want to sign up, you can go to tradinganalysis.com/track. This is an encore event from the June 27th webinar. If you weren't able to attend that, we're going to be discussing our Elliott Wave Fast Track course and just overall chatting a little bit about Elliott Wave and some of the reasons that we absolutely love it. So back over to you, Alex. Just wanted to get that out there, and I will drop the link in the chat. So making you presenter in just a second here. Whoops. That's the wrong button. I don't want to mute Alex. I want to make him presenter. All right, screen's coming your direction, sir. All right, take us away.
Okay, do you see the chart?
Yep.
Okay, so this is the dollar index. As you know, we are still tracking this possible 1-2-1-2 wave count. As long as we trade below some of these key invalidation and resistance levels, we're going to stay bearish on dollar index for now. And if you look here, specifically, this is, I mean, it doesn't give so much, further bullish conviction, current price action. So in a line of expecting some pullback on the stocks, possibly, and as long as we trade above this support, I will still look for another push up in dollar index, reaching maybe this 98, 99 levels in a possible risk-off scenario for a, let's say, week or 2 or 3 in advance. And then I will look for a further more impulsive, more kind of a steeper move down in dollar, as long as we trade above this 150 resistance. So going to the oil chart, I'm going to use the oil because we are on the, I'm on the same feed. So we are looking the VTI oil. So I'm still going to look for a pullback in oil. I think we are in a either small triangle here in a wave 1, 2, up in 3, triangle in 4, or some type of an ending diagonal here. So maybe just a little bit more upside, or from here you can expect a possible drop in some type of an ABC, or even a more complex corrective pullback back to 22, 26, 28 levels in a weeks ahead, because I think that following our model, 5-wave move is pretty done. So I expect just a small push, possibly on the upside, and then a larger reversal, which will be confirmed by 5-wave move on the downside in this A wave. This is a 6-hour chart. On daily. We are, I think, close to cover this gap. Maybe we already covered it, and then I think we're going to reverse lower on oil in the weeks to come. As the other currencies we have some type of a list of currencies that we are tracking for possible entries. We are looking euro for now bullish, either some type of a triangle formation, but I think this is a kind of a mirror image of dollar index. So I'm looking for WXY for a possible move down to 110, 111. We are keep tracking freshly dollar yen for a bit more lower, so in line with the possible risk-off situation. So we are looking lower in dollar yen. We are also looking lower in some also risk-on currencies, like a correction in Aussie dollar, and we also look for some type of a move lower. Pound is holding very well, but overall wave count also suggests, or maybe kind of a telling us that this might be just an X wave, and we're going to move one more wave lower to reach some tradable lows. So we will see on overall weekly level. I like some of these risk-on currencies for the midterm hold. As the cryptos are concerned, I'm still holding this bearish view on a Bitcoin with a little bit more downside. I don't like the fact that we are not accelerating to the downside. This should be a wave, third of a third. So either we are already short, but I would like to see very soon this acceleration to the downside. Otherwise, I will possibly turn to looking at this consolidation as a triangle with one possible move on the upside, and then maybe correction might start. For now, I'm going to keep this bearish scenario. Also, I have introduced
one thing, Alex, we saw on that is that there seems to be a lot of support at that 9,000 region, and we were talking with our members in our webinar the other day about the cost of mining and miners break even. So I think there's a lot of pressure to keep the price higher. and then 800 after the halving has happened. The the difficulty has increased for the miners. So there's a lot of resistance to push this thing down, and we're starting to see that play out.
Yeah, actually, I was surprised. I didn't know that information, that actually the cost of mining climb up that much. It's between some say it's around $12,500. Some say it's around 7 to 9,000. I really don't know exactly, but for me, even 7-8,000, it's a huge cost to mine one Bitcoin. So yeah, 9,000 level has been defended very heavily in the last few weeks. If we start pushing higher above this channel, as I said, I will have to maybe reconsider of a smaller bullish penetration to the upside and then reversal. So we are still not there. We will see if the Bitcoin will follow if we get the move down on the S&P. Because we have been seeing lately some of correlation between the cryptos, so especially Bitcoin and the S&P. So as I said yesterday, if I want to get rid of a little bit more competition, I will probably force Bitcoin to this 7,000 levels. If this is going to happen, this will be my really a good target zone for a possible midterm longs, but we will see. It's still undecided. It's kind of a sideways, but for this wave count, I'm a little bit worried now because we don't see this acceleration we are about to see in a third of a third. I have prepared also some alternate wave counts which depicts this move as an W ABC for W. Maybe this is some type of a flat in X, and we might go down in another Y wave in the ABC, which will allow a little bit of penetration of these levels here. So this is also one more possibility, and we are keep tracking this and looking for the possible clues among these several possibilities on a Bitcoin. So we also trade cryptos and Forex. So if you guys likes to join us and our service, we trade and analyze as well, please, you are welcome. So that's a short update, Bennett. If clients would like to see something else or viewers.
Yeah, they want to see gold, Alex, before we let you off the hook. What's your thoughts on gold, Alex?
Sure. Okay. Yeah, gold is moving up. As you know, we have been keeping this bullish stance. We are moving above this 127.2, which is a kind of a key ratio for possible flat, which I was looking as a possibility. So potentially this is 1-2, and we are going to see more upside in gold. In which case I will a bit remodel this wave count, which I can present next time. But as you can see, if we continue higher, we are going to see 1,900 levels challenge next. We are already crossing successfully this resistance, so on the higher time frame. So the next one even might be the next previous highs at 1,920. So gold is looking nice. This situation and environment on all sides are looking as a good kind of a productive field to own gold. So I will be tracking this bullish wave count on gold overall. So maybe I'm going to do some modifications, as you do always, on the wave counts as the price is moving and invalidating some key levels. So I'm going to address that in probably next Wednesday. But for now, I'm going to stay constructive on gold. I mean, this breakup is kind of allowed. Still for a flat, but it looks kind of an impulsive. So let's see what is going to happen here. Are we going to see maybe a sharp reversal to this 1,700, 600, which will be nice for this wave 2, or we're going to just continue higher in maybe some more impulsive wave structures. So gold is exciting. I see many of the fund managers and market pundits are kind of saying that it's time for gold to shine. Of course, we are looking this from technical perspective, and for now, gold looks good.
Yeah, that 1800 level is certainly key. It's nice to see gold finally trying to contest it and break through there.
Yeah, it's breaking. It's breaking now. 1,811.12 we are trading. So this 127.2 level, it starts to be challenged here. So I need to see a quick reversal. Otherwise, we will become a short-term more bullish on this gold wave count.
Very good, Alex.
All right.
Much appreciated. Thank you, sir. And guys, just a quick reminder, if you do want to get signed up for that webinar, you can go to tradinganalysis.com/track, TRACK, to get signed up for that. Gentlemen, appreciated. Anything else? Any parting closing words before we send them off to enjoy the open here?
You got a few chart requests, Bennett. Could you take a look at Square?
Yeah, be happy to take a peek here at what's happening in Square. So we currently don't have a wave count on Square, but let me just go ahead and bring over Motive Wave, and we'll take a look at.
That was one of your favorite stocks.
It was when it was printing a nice pattern that we could trade, but all right. So taking a look at the daily here, I'm just going to go straight for a 195 chart here. So it looks like we were counting this lower, which came to completion. Maybe we do have a wave count here. I take that back. Let's see what's going on. Maybe it's just hidden. One of the cool features of Motive Wave, you can quickly hide some of your smaller degree structures. All right, so we've got a pretty good zone of support there that we came out of in a possible wave 4 position, and we've already contested the upper end of that extension zone, but off the daily down to the 195, we bring in a couple of traditional indicators.
Yeah, it's
here.
real difficult to see such low volatility in this price trading since April that that's hard to make a wave count in there. The only thing you can see is that first correction. From then on, it's just been trending nicely.
It really has, and on the half-day chart here, you can see this volume's been pretty consistent as well throughout those peaks. Relative strength is just now peaking on the 195. 1 hour chart's another one I like to identify. Probably a third of a third going on somewhere in here, but I'd be looking for an associated fourth wave correction, something to square up more appropriately with that. But
haven't
certainly,
really seen it yet.
Yep,
Yeah.
It's not quite there yet. So overall, quite a move there off that low.
Can you go ahead and just lay that out as a 1, 2, 3, 4, and let's do a 3v1 ratio and see where that would take us?
Absolutely.
Because I think we're already well extended, probably 200%. So you had a keen eye there on a small, potentially a wave 3, 4 there. What's that? Oh, there's 1618. So it's possible where we are today, we still could be in this wave 3. And you've got much more, because there's a 200% retracement level. That's not the most particular, but with a stock that's got such strong momentum as this one, that's certainly valid. We haven't seen a large enough correction to pair up with that wave 2. Maybe that's what's about to form, because I am starting to see, if you look into that ending diagonal formation right there in the last last week or so performance there, starting to see a little bit of a stall out. I showed you PayPal in the relative rotation. It's very high relative strength in my tech sector, and but it was starting to lose a little bit of momentum. There's a little momentum decay, and I think that's evident there.
Yeah, absolutely. That's a pretty
See,
good,
that looks
set
better.
overlap.
See, now you've got your green wave 2 and 4. They kind of pair up in similar size and shape. So, so yeah, I think we're due for a bit of a correction here. You know, we're not looking at total market collapse, but we certainly need to. Everything can't go up forever, including Tesla. One of our clients wants you to look at Tesla. That's another one you're going to see. It's Tesla's not only going to the moon, they're going to Mars, right? So,
you know, Tesla. What a chart, right? So out of that wave 4, let's just think outside of the box here and not even take into consideration that is a $350 possible fourth wave, and we're now trading 1400. Taking into consideration how large that correction was, where's our 5 versus 1 plus 4? So we're just now reaching equality of 5 and 1 inside of that structure. 5E1 plus 4. We're looking at about 200% there. Let me clean this up. This is an awfully extended chart, and we talked about this last week, that, or maybe this was in our member webinar, that, you know, these two waves don't really look very proportional to one another. And, you know, there are times in which we'll see a fourth wave that's really long in terms of time elapsed compared to wave 2, but allowing for such a sharp wave 4 as compared to wave 2, we're talking over a 261.8% of the magnitude of wave 2. That leads me to the possibility that this is either 1-2 or AB type of a situation. Equality is up there at 1900. My goodness.
Is this your 4,000 price target on Tesla?
Not my price target, but there are analyst price targets on the street that are in the 4,000 levels.
I didn't say when it was going to happen, but it certainly could happen. It's good, time.
Yeah.
It's getting there fast, isn't it?
This is one of those charts that's so parabolic that even log scale has issues with it. So,
wow,
incredible run there.
Yeah.
Can't comment too much on Tesla, unfortunately. All right, any other chart requests, or?
Well, I mean, in one point, if we start to move down in ABC here, this will be much more visible. Because I think you can put also a few wave counts here as well, and this one is also suggesting for a possible reversal. So let's see if we see 5 waves down from this 1,400 levels. This might be a challenging one for longs. We will see.
Absolutely. It's going to be scary.
This is the transport sector somebody was asking about.
Yeah. So
Transport's recovery is not very promising looking, is it?
Not really, not at all. No, it's looking to be more of a 3-wave print at this point. Notice that spot-on equality of these two particular legs, whether they're A and C or 1 and 3. You know, here we can get a little 5-wave swing, potentially a leading diagonal. I'm pretty particular when it comes to leading diagonals. This is clearly of a contracting variety. Our 3rd wave is shorter than our wave 1. Our 5th wave is shorter than our wave 3. Wave 4 is a smaller net percent correction, so that's very valid. So essentially we had a motive diagonal off the lows. We printed 3 waves down into what appears to be a spot-on 61 or 50% retracement, right there at that 50 and 61% retracement level. And now all we've seen is a measured move. So essentially the magnitude of this advance projected from that correction, that's where we ran into resistance. In fact, the high was 179.88 versus 177.58. So at this point, alternatively, this could be some sort of situation where we are looking at a 1, 2, and then smaller degree 1, 2. If this were to be, in fact, valid, so far here we're looking at a 14.4% correction. So I would not want to see, wow, we're already at a 13.8. So if we start seeing this, you know, break under 150, then we're looking at a larger correction than what would be the higher degree wave structure. So calling it a 1-2-1-2 would be a technical invalidation of the fractal nature of Elliott. So at this point, all we have are 3 waves back, and more importantly, let's see where our true high was. Let's not go off our wave. Let's just take a look at a peak to trough fib retracement. You'll notice so far we retraced between 61 and 78.6% of the decline from the technical all-time intraday high there. So interesting looking chart. FedEx looks a little bit more constructive. We've actually been long FedEx. I took a long position in FedEx at 125 on this breakout. We identified the fact that this could very well be simply an ABC. In fact, look at this. Just as we saw there in IYT, notice your June 6th high for FedEx was spot on equality of this initial leg projected from that correction. So at that point, that could have been ABC. We are seeing a break through this downtrending impulsive trend channel. If I were to bring in, let's do this, add study, we'll go bring in volume here, add study, let's bring in RSI. You'll notice that on the daily chart in this 1, 2, 1, 2, 1, 2, obviously a third of a third of a third, you should see your peak in momentum as well as a peak in volume. On our daily chart, this green wave 3, which is a third of a third of a third, did in fact give us that nice extreme here on the RSI, and then we proceeded to see divergence that's now set in and carried us back through this trend channel. So could this have been an ABC move and a complete correction? Certainly. We could work out a count like that. But FedEx looks a little bit more constructive. I'd still be watching for your typical fib retracement zones. All right, guys.
Very good.
Guys, hey, if you've enjoyed the content, please give a thumbs up. Let the YouTube algorithm know that you're enjoying the content. You can subscribe to Todd Gordon's channel, turn on notifications. We'd also ask that you subscribe to the Trading Analysis YouTube channel, where we do post blogs and other free content there. So thanks again once again for tuning in here. Good old middle of the week. I love Wednesdays. Get some good market action going here. We'll see what transpires on the session. So far, the open's been relatively muted. Looks like we're starting to tick to the upside there in the S&P. So, guys, thanks again for tuning in. Terry, Alex, gentlemen, be safe. We'll see everybody next week.
All right.
Take care.
See you guys.
See you guys.